Good morning, folks. This is Dr. Fred Boyd of Equity Funding of Washington, and I'm talking to you today about high-yield secured investing through mortgage notes. I want to take you back on a little history lesson to 2008. For those of you who don't remember, this was a pretty scary time. In 2 days, the United States stock market lost over $91 billion of net worth. That's money that came out of an awful lot of Americans' pockets. We'd seen those kinds of ups and downs previously, but usually they were pretty short. Market came back quickly. This one seemed to be quite different. We were comfortable in the stock market, but with this bust, a lot of money has left the stock market. A lot of my money has left the stock market, and maybe yours as well. And we're waiting for something better to come along. I think I found it. Stock market volatility creates anxious money. If you look at the stock market over the past year, you can see that there have been some pretty substantial ups and downs. And if you look at the entire 12-month period, the stock market is down almost 3%. But if you look at the stock market over all of its history, the American economy has grown, and that's reflected in the value of the U.S. stock market. But looking at the right-hand side of this graph, over the last 30 years, there have been some big ups and some big downs. And if you have to take your money out during a big down, you're having to take out some pretty expensive money. And so looking forward, we like to think that we can understand the direction of the market. Feel like we feel the momentum. But if you look at trend lines, you can either predict the market's going up or the market's going down. And I can assure you, you're right, either up or down. So the question is, what's next? Do you want to feel like you're riding this corkscrew roller coaster when you should be living a happy retirement? So for me, in 2016, these are the things that I wanted in investment. I want a good return. I want growth that is competitive with the long-term stock market outcomes. I want stability. I like the predictability of monthly payments. I want security above everything else, really. I want it to be backed by a solid asset, something that's real. I want security in knowing that my vendors are experienced. And I want there to be a true underlying value that doesn't go away even if the economy tanks, or if I tank, and we all do eventually. I think mortgage note investing does all this and more. In terms of return, if you're buying a short-term front-end partial, that means you're buying the front part of the payment entitlement stream, you can expect a return of anywhere from 5 to 8%. These are very secure because the back end of this mortgage note is still held by us, Equity Funding of Washington, and we make our profit after you've got your last payment. So we're going to make sure that that payment stream continues unabated. If you want to buy an entire note, you can find yields of up to 10% on a 20 to 30 year performing note. Think about it in terms of stability. How do you pay your mortgage? For me, it's every month. First 3 days of the month, that automatic payment goes out of my paycheck and goes to the lender. We buy a note looking at the occupant's credit, looking at the borrower's pay history, looking at evidence that they are invested emotionally in this house. What's it look like when you look at the house from the outside? Secure. This is American real estate. This is one of your fellow Americans' primary residence. In this transaction, you become the bank, and you're secured by the full value of the collateral, in this case, the borrower's house. As far as security in your vendor, Equity Funding of Washington has been in business since 2003. We've done hard money lending, we've done a wide range of different real estate investments, and for the last several years we've been focused primarily on performing mortgage notes. Finally, the real security of this investment is that it is integral in the American dream. People always want to buy a house. They always need a place to live. Even when the economy tanks, even when you tank, you can pass ownership of the note onto your heirs in your estate. This is in contrast to something like an annuity where the investment dies when you do. I'd like to show you a couple of our recent note purchases. This is a note that we bought a couple months ago in Oxford, Mississippi. As you can see, it's a nice brick ranch house. It's about 4 miles out of town. For those of you who are unfamiliar with Oxford, it is the home of the University of Mississippi. I'm a Southeastern Conference football fan, and we refer to them as the Ole Miss Rebels. According to professional realtor boots on the ground, this collateral has a value of $135,000. Now bear in mind, we're not buying the collateral, but we're buying the note. And if something were to go wrong with the note, we have to look at the collateral and be willing to own it in some hopefully very rare situations. This home was purchased by the borrower in 1994. He took out a 20-year note, refinanced in 2005. The unpaid balance on that note is $87,199.62. That note has monthly payments of $855.70, and that note has about 19 years to run. So for $92,000, you can buy monthly payment streams for 19 years of $855.70. That has an investment to value ratio of 66% and a calculated yield, the good Lord willing and the creek don't rise kind of yield, of 9.2%. Why is this a great note? Well, you've already clued in, it's a great yield. But beyond that, and these are the things that we look at Equity Funding in Washington when we're buying a note for our portfolio, it has a great payment history. This is a reliable payer. The three things that can really make a note investment go bad are property tax problems. Property liens get in front of even the first lien on a property, so they can take the value of your property pretty quick. Has a clean title, and there are no blight or crime issues. Another note, this one in Cincinnati, Ohio. As you can see, it's a cute little Cape Cod in the city. Again, boots on the ground value of $47,500. This is a real house for $47,500. For those of us who live on the fringes of the United States, we find that hard to believe. But in the middle, in the Midwest and the Rust Belt, there are literally millions of these houses that are for sale for under $100,000. And most of those are sold either to cash buyers or with seller financing, the source of a lot of our notes. Obviously, this house has excellent emotional equity, good pride of ownership. It was a 30-year purchase money mortgage written in 2014. Has an unpaid balance of $36,617, monthly payment of $317.85 with over 28 years of payments remaining. So you can buy 28 years of $317.85 a month for $33,000. Investment to value ratio 69%. Calculated yield of over 9.5%. Why is this a great note? Again, high yield, 9.5 plus. Solid payment history, over 3 years of reliable payments. No property tax problems, clean title, no blight or crime issues. Lastly, I'd like to introduce myself to you guys. We're Equity Funding of Washington. I founded this company in 2003. My partners are Virginia Rogers of Austin, Texas, Kathleen Davison of Phoenix, Arizona, and myself. We are experienced, successful real estate investors. All of us have been investing in real estate for over 30 years. We are careful and high service, experienced note buyers, but vocationally, we've all been shopkeepers and educators. We sell out of our inventory things that we've bought to knowledgeable buyers. We're not brokers. We're not shills. We're not realtors. You're not paying us fees. You're not paying us commissions. But we're also not lawyers or accountants. for anybody looking at an investment that they're not real familiar with, it's always a good idea to talk to your investment team. Talk to your lawyer, talk to your accountant to assess the appropriateness of any new investment for your particular needs. We look forward to talking to you either face-to-face or on the phone to help you pick your next great investment. Thank you for your time. Have a great day.